Hi, welcome to Easy Payroll Guide. My name is Karin Hutchinson, and in this video we're going to be talking about how to calculate your federal unemployment liability. The federal unemployment is also known as FUTA, which stands for Federal Unemployment Tax Act. So you'll hear these two terms being used synonymously. We're going to be calculating our federal unemployment liability in preparation for completion of the IRS Form 940, which is the federal unemployment form. A few things that we need to know about FUTA. You must make a deposit for your federal unemployment tax accountability once your liability reaches $500. Now, what this means is you need to keep track of your FUTA liability. Once it reaches $500, you must make a deposit. If your liability doesn't reach $500 throughout the entire calendar year, then you can wait and make your deposits with your 940 form, which would be at the beginning of the new year. So you're going to be calculating your 940 for the entire year, which will be due in January of the following year. And that's when you can pay your liability if it doesn't reach $500. What you need to know is that the federal unemployment tax is paid on the first $7,000 of each employee's wages. This is a tax that is paid by the employer. It is not withheld from the employee's paycheck, and it is only paid on the first $7,000 in wages. The current federal unemployment rate is 6%. However, most states are eligible for a credit, which will reduce it to 0.6%. The Federal Unemployment Tax Act is in place to oversee the state's unemployment agencies. So the majority of your unemployment tax is going to go to the state. However, because the federal unemployment has to oversee this, they are collecting a small portion. If you pay your state unemployment tax on time, and you are not negligent in any way in the tax that you owe your state, then you will be eligible for the credit, which will greatly reduce the federal unemployment rate. So what we're going to do is we're going to just talk about in this video how to calculate your FUTA liability throughout the year. Because again, once you reach that $500 liability, you must pay the tax. If you reach your $500 liability in March, then you need to pay that tax in March and then start calculating again to see when you'll reach that $500 liability again. So typically, if you take $7,000 and you multiply it by 0.006, which is the 0.6%, you'll find that for each employee, you owe $42 in FUTA liability. If you hire less than 10 employees, then you pretty much don't have to worry about calculating throughout the year. However, if you start employing more employees, more than 10, and you're paying them more than $7,000 in wages, then you will need to calculate throughout the year to make sure that you pay that $500 liability by the end of the quarter in which it's reached. Okay, so for example, we're going to start with fictitiously 3 employees, and I'm going to give you the wages and how I determine when I need to pay the FUTA tax and how I keep track of how much tax is owed for each employee. So for quarter 1, we have 3 employees, A, B, and C. And in the first column here, I'm just dictating how much I've paid in wages for the quarter. So this is for all 3 months, January, February, March. These are gross wages as well. And then we're going to talk about which wages are subject to the FUTA tax. So these are just straight wages. They're all subject to the FUTA tax. And employee A, I paid $4,000. Employee B, $3,500, and employee C, $2,000. Since we're paying FUTA liability on the first $7,000 in wages, all of these employees' wages are subject to the FUTA tax because none of them have reached the $7,000 threshold. So I'm going to be paying FUTA tax on $4,000, $3,500, and $2,000 since they're all under $7,000. So for the first quarter, I will be paying FUTA tax on $9,500. Okay, so my first quarter liability is $57. $9,500 times 0.006. Since it's $57, I can carry this $57 over into second quarter because I haven't reached that $500 threshold yet. But for second quarter, I need to decide how much of their future wages, or how much of their wages for that quarter, are subject to the tax. Because once they reach $7,000, I don't owe any more tax for that particular employee. So for first quarter, what we need to do is we need to take our magic number, and I'll put that up here. Our magic number is $7,000. So we want to take $7,000 and subtract what we've already paid. So we paid $4,000. That means that we still owe tax on $3,000. Okay, $7,000 minus $4,000 is $3,000. For employee B, $7,000 minus $3,500 is $3,500. And for employee C, $7,000 minus $2,000 is $5,000. So this is how much I still owe for each employee in taxes for FUTA. We're going to carry these amounts over to our chart for second quarter, and we're going to put them here because I'm not going to pay more than $3,000 in FUTA tax for employee A. Okay, I'm not going to pay more than I have to. So let's look at second quarter here. And for second quarter, employee A, I owe $3,000, or I have to pay tax on $3,000 more dollars, and he was paid $4,000 in wages. So the wages that are subject to the FUTA tax are only $3,000. This is the limit for paying FUTA tax. Even though I paid him more, I only have to pay FUTA tax on the $3,000 that's left. All right, and then future tax is nothing because I've already paid it. $4,000 and then $3,000 more is $7,000. I've reached my limit. I no longer pay FUTA tax for employee A after this $3,000. For employee B, I have $3,500 left. His wages were $3,000. So since he did not reach that $3,500 mark, I'm going to pay taxes on the full $3,000, and then what's left is $3,500 minus $3,000, which is $500. So you can see he has not reached the $7,000 mark. $3,500 plus $3,000 is $6,500. So $500 more dollars. Employee C, we had $5,000 more that we needed to be accountable for, and his wages were only $1,000. We're going to pay FUTA on the $1,000 that we paid him, and then we still have $4,000 left that we'll need to pay tax on in the future. So for second quarter, I need to pay taxes on $8,000. I'm sorry, that should not be $8,000. That should be $7,000 if my math is correct. 6 plus 1 is 7. So $7,000 is the wages that I need to pay FUTA tax on. So if I multiply 7,000 times 0.006, I find that I need to pay $42 for second quarter liability. But what I need to do now is I need to take first quarter and second quarter. So 57 plus 42 is $99. So after the second quarter, I am responsible for $99 in FUTA liability. And at this point, I still have not reached the $500 mark, so I'm fine. So then I would go on to third quarter. Third quarter, employee A is done. I've marked him off my list. He's reached $7,000 in wages. I no longer need to worry about FUTA tax. Employee B, we still had $500 that we would have to pay taxes on. If I paid him $3,500 for the quarter, we only have to pay taxes on $500 because that's all we're responsible for. Employee C, we were responsible for $4,000. I'm going to pay wages of $4,000, so I'm responsible for all $4,000. Now, notice that I've met my requirements for all 3 employees. I don't owe any money in the future for FUTA tax on any of these employees because I've reached the $7,000 limit. So for the quarter, I've paid $11,500, but I'm only paying FUTA tax on $4,500 for employees B and C. And if I do $4,500 times the rate of 0.006, I owe $27. So $27 for for FUTA tax for employees B and C. But I'm not done because I need to add that 27 to first and second quarter. So 57 plus 42 plus 27 is $126. That's after third quarter. And if I maintain these 3 employees and do not hire any other employees, then I only owe $126 at the end of the year for FUTA. So you can see that with hiring just 3 employees, that's my liability, and I do not reach the $500 threshold. Now, if I were to hire another employee at some point, I would have to add that employee to my chart, and I would have to start, it doesn't matter what quarter, I'd have to start adding their wages and pay on the first $7,000 of their wages as well, and add that to what I already have. So it's $7,000 for every employee that you must pay FUTA tax. Okay, so again, this is just a way to keep track of your FUTA liability to make sure that you are paying the federal government at the time that you reach a $500 liability. Okay, thank you very much.